oil is adding to its biggest advance in more than 2 weeks today. That's after fresh evidence of the OPEC Plus coalition's resolve to cut output with a fourth month of lower production. Added to that, a deepening crisis in Venezuela is supporting the bullish outlook for prices. Let's speak to our chief energy correspondent, Javier Blas. Javier, great to have you with us. How much of this is being driven by Saudi?
Well, Saudi Arabia is in part the biggest reason of this drop in OPEC production. The Saudis are lowering their production even below what they agree with OPEC in an effort to rebalance supply and demand worldwide and push prices higher. And so far they have been successful. The price of oil have a very good quarter in between January and March, and the price is moving higher, closing on the $70 a barrel mark. But don't forget about Venezuela also, where production is also rapidly dropping due to the political crisis.
Javier, how much higher could we go after the best quarter since 2009 in Q1?
Well, that very much depends a lot on politics. The Saudis want prices higher, probably $70 at the very minimum for Brent, because they need that to balance their fiscal budget. But we have two big unknowns that are related to politics. The first one is Iran, where the U.S. needs to renew the waivers to several countries that can continue buying Iranian crude, and that's coming into May, and we do not know what the White House is going to do. The other one is Venezuela, where production is rapidly falling. It dropped below 1 million barrels a day last month, and probably we're going to see even lower production numbers in April because the political crisis there is deepening.
Right, so that's OPEC and OPEC Plus, Javier. What about the impact of shale, but also the demand outlook for the rest of the year?
Well, the demand is looking certainly weaker than in the past few years, and that's mostly because of the economic slowdown worldwide, in particular in China, where we are seeing lower growth for oil demand and lower growth in oil imports. The shale is a bit of a question mark. We have seen very slow growth on the first 3 months of the year, in part because of bad weather in the United States. We have terrible weather in North Dakota and also in West Texas in January and February. It was very cold down there. But also we have relatively low prices, and there is investor pressure for companies to cut on spending, and that means lower production growth in the first quarter. What is going to happen later on the year? Well, probably we're going to see an acceleration of growth because new pipelines in the Permian are coming, and that's going to allow companies to increase production. And the other thing is prices are getting to the point where it's going to make a lot of economical sense for these companies to increase spending.